All right, everybody. Welcome to the Self-Directed IRA Saturday today. My name is Colin Taylor. I'm one of the IRA specialists here at Quest. Do apologize for the delay. I was actually having a little bit of technical difficulties and had to switch laptops 2 or 3 times. So I am really sorry about that. We'll kind of run through just a quick intro before we get to Andrew's presentation. I'm super excited about it. Really. Myself, actually, my parents are mobile home park investors and have been for a long time. So I've kind of been surrounded by it. Just really interested to hear what Andrew has to say and hope you all are as well. Before I do get this going, any questions you guys have, go ahead and put them in the comments throughout the presentation and we will get them to our presenter. So without further ado, let me just run through our quick intro. So as always, guys, if you're familiar with our presentations, you know a little bit about our disclaimer. We're not here to provide any sort of investment, tax, legal advice, anything like that. This is, purely for y'all's education to kind of help expand your knowledge. So please take it as such. Now, just a little bit about who is Quest. We are one of the largest self-directed IRA custodians in Texas. For those of you who do not know about us, maybe this is your first time joining, about 20,000 or over that now, probably closer to 24,000 active investor clients with almost 3 billion, and this actually needs to be updated, almost 3 billion now in assets under management. So we're growing, as you can see. And, that's just a little bit about us. We have 34 certified IRA services professionals on staff with about 110 employees. And those certified IRA service professionals, or CISP certificate guys, are ones that went through a pretty rigorous training course and took a several hour-long test to get that certification, something that I'm currently working towards with. So you can always, so actually this specific webinar will be recorded, will be posted on our YouTube and our Facebook right after this, as well as all of our other past webinars and things like that. So please utilize that to kind of further your education on alternative investing, especially with a self-directed IRA. A little bit about the classes and things we do host. So these are our weekly classes. We host one every Saturday at 12 p.m. Every week. And then we have a virtual networking happy hour that happens on the last Wednesday of the fourth Wednesday of every month at 6:30 p.m. Central Time. And that's really a great one to kind of do some networking and learn about different deals, investment opportunities, even services and things like that are out there. And that's kind of across the country. We have clients and different vendors join. So those are always great. How to get in touch with us. That's my personal email right there. If you do have any questions about self-directed IRAs and how to utilize these types of accounts to invest your retirement savings into alternative assets like mobile home park investing, other types of real estate, anything like that, guys, give me a call, shoot me an email, or any of our other IRA specialists, and we're happy to help. So without further ado, I try to run through that really, really quick so we can get Andrew up here. Victor, we were playing cat and mouse there. Hey, Andrew, how's it going? Sorry for the delay.
Yeah, no worries, Colin. Thank you so much for having me.
Yeah, absolutely. Pleasure to have you on. I'm really excited to kind of hear what you have to say about mobile home park investing and just how your methods of going about that. So I'll, without further ado, I'll kind of let you take it away.
Awesome. Well, thanks again, Colin, for having me, and thank you to Quest Trust for bringing me on. The name of this webinar is Why Mobile Home Park Investing is Recession and Inflation Resistant. My name is Andrew Keel, and I'm with Keel Team Real Estate Investments. My goal today is to make this webinar as value-packed and as educational as possible. Maybe at the end, you'll consider, adding mobile home park investments to your portfolio, and maybe you'll say, you know what, I'm going to stay away. But my only ask is that if I do provide over-the-top value, if you would please just leave me a review afterwards by emailing Quest and letting them know I did a good job. So we will have a Q&A section at the end as well. So happy to answer any questions you have. Okay, let's dive in. So the 5 major takeaways from this class, that I hope you can walk away with is, number 1, why mobile home park investing is non-correlated and inflation resistant. Why mobile home park investing is an inflation hedge. How to find mobile home park deal sponsors to invest with and how to vet them, because this is not as easy as it might sound. There's a lot of other asset type operators out there kind of advertising all over the place. But for mobile home parks, it's actually, it's kind of tough to find more than 5 to invest with. Number 4, how to quickly analyze a mobile home park investment. And number 5, typical returns investors can expect. Now, I just want to make sure, just like there's the disclaimer, I'm going to be educating off of my experience, right? So none of this is like, indefinites. And obviously the market has changed with interest rates, skyrocketing, very quickly over the last year. So, some of this, the next 5 years are going to look a lot different than the last 5, right? And notice how I said mobile home park investing is non-correlated and inflation resistant. I didn't say, inflation proof or recession proof, because, everybody gets affected in a downturn. Okay, a little about me. I'm a top 100 owner of manufactured housing communities. We have over 2,000 lots across 33 mobile home parks across 10 states. Known for being very hands-on. A lot of people call me a control freak, but I wear many hats. I can change a ball valve, underneath a mobile home. I also can, send out investor reporting and do investor relations. We also do own a mobile home transport and installation company based out of St. Louis. So, that's one aspect that's helped us infill a lot more homes and with our value add approach. I have a podcast. It's called the Passive Mobile Home Park Investing Podcast. Again, this is educational, helps, educate people on the asset class and the differences from a value add and commercial real estate standpoint. I also compete in Ironmans, and you can find out more at andrewkeel.com about my story. Okay, let's get into the juicy stuff. So, does anybody think a recession's coming? I mean, we're kind of in this like purgatory state right now. That's kind of weird, where there's not a formal one, but there's like all this hesitation in the marketplace. It's definitely a weird place to be. I'm not sure if you all are familiar, but with the inverted yield curve and what that means. If anyone's familiar with this, you probably have a good idea. But the yield curve is simply a graph showing interest rates currently and various maturity periods for those. With rates on a vertical axis and time on the horizontal, right here at the bottom. Yields are supposed to reflect risk, and risk, typically grows with time, right? So the chance of something bad happening in the next 5 years is typically higher than the chance of something equally bad happening in the next year. And lenders and bond investors should demand a higher yield as compensation for that higher risk. And presently they aren't. And, inversion is a historically reliable but early indicator of a recession. So inversions have preceded recessions by anywhere from a few months to up to a few years. So the spread between the 10-year U.S. Treasury yield and the 2-year U.S. Treasury yield inverted by as much as 7 basis points in early April of last year. So a weird place to be right now in terms of what's to come ahead. Okay, recession resistant. Why would mobile home parks be recession resistant? Well, number one, they're non-correlated. Number two, and I'm going to go into each of these items and give you some detail and some color. Number two, the demand for affordable housing is unprecedented. Number three, mobile home park residents tend to stay put longer. Number four, mobile home parks typically operate with higher profit margins. And number five, they can typically be acquired for higher cap rates, which I'll add some color on why that is the case as well in a little bit. So non-correlated, the definition of that is having no mutual relationship not affecting one through changes in the other. And that typically means that mobile home parks generally perform well in both strong and weak economic environments. So no matter what the Wall Street casino is doing, mobile home parks will perform because they cover the most basic need of shelter, which is needed no matter what GDP is doing or what the case is. This is where people live, so it's very very necessary. Number two, the demand for affordable housing is unprecedented. I mean, I think that's an obvious one right there. Home prices went up over 20% from March of 21 to March of 22, and rents jumped 12% in the same time period across the country. In some specific markets, it went well above that. So, obviously, affordable housing is at the forefront of a lot of a lot of people right now, a lot of politicians specifically. And in 2020, 30% of all households had unaffordable rent. So that's defined as housing costs exceeding 30% of household income. So definitely a problem in the United States right now, and no clear, easy solution. I think that's important to note. Mobile home parks, generally are the least affordable form of housing. They're relatively inexpensive, and really the most expensive part is going to be the land and the utilities, to get the utilities brought to the mobile homes. So it could be the answer. Number three, mobile home park residents tend to stay put longer. When they own their homes, tenant turnover is only around 5% annually versus nearly 50% in apartments, which is obviously huge. So it's affordability is the main factor that keeps tenants in place, and that makes mobile home parks and the income they create for investors a more stable investment. Number four, mobile home parks typically operate with higher profit margins, compared to a lot of other commercial real estate. Typically, as a percentage of gross income or a percentage of gross profit, the expenses are only around 35%. So, if you look at that leaves a lot of meat on the bone for investors. Let me see what my notes have here. So yeah, inside of those 35% expenses would include taxes, insurance, management fees, maintenance, etc. Other property types like apartments, typically run around 50%, or higher on the expense ratio side of things. Another cool thing about mobile home parks is they have higher depreciation. They typically are depreciated over around 17 years compared to, some that are depreciated over longer schedules. They also have one of the lowest default rates out of all commercial loans, mobile home parks and self-storage. So just some interesting tidbits to be aware of as an investor in looking at these alternative asset classes. Yeah, a penny saved is a penny earned, as old Ben Franklin says. So saving on taxes is a huge plus. Obviously, things changed where it was 100% depreciation last year, and now it is 80% this year, and it's being phased out. But still, that is a huge benefit to offset other income. Okay, mobile home parks can be acquired for higher cap rates. So a cap rate is the purchase price divided by the income that it generates, and that's how commercial real estate is valued. The main reason for this is because the stigma of owning a mobile home park scares people away. And I'll never forget the first investor that I approached to invest with me in a mobile home park. It was a family friend. He was like, one of the wealthiest guys my family knew. He coached me in basketball when I was little, and I invited him out to lunch. I brought him the numbers, and I showed him, hey, this is how I'm gonna generate a 20% plus return for you annually. And I remember at this nice restaurant, I remember him, telling me, he said, Andrew, I love you like you're my own son, but there's no way that I'm investing in a trailer park with you. And that just stuck. And it was the stigma of, investing in a trailer park And it's not sexy, right? It's not sexy to go to the country club and tell people, that's what you're investing in. So I think it scares a lot of people away. And the management of that low income housing, can be more difficult too. So I think that also scares some people away. So, with that additional risk or perceived risk, you're able to typically get, better pricing on the income being generated. There's also a lower break-even point because of that lower purchase price that you're paying for that income stream, and that adds a safety net, or it can, add a safety net depending on the operator. Inflation nation. Who here is worried about inflation? Anybody? I mean, it's kind of crazy right now. I was talking to somebody recently about the price of eggs, and they said that oh man, I forget specifically, but they said that eggs are costing more than a pound of beef or something like that, a certain number, and it was encouraging people to eat more beef than eggs. It's just crazy right now, and it's not just luxury goods; it's everyday items, right? Like your eggs, your butter, and so forth. So it's just kind of crazy where we're at. I'm worried about it too. I think it's this invisible tax that is eating away at our hard-earned money each and every day, and it kind of forces you to it forces you to rethink where you're putting your capital and deploying it. So mobile home parks, have some inflation-resistant characteristics. The first reason would be that we can raise rents, right? With all commercial real estate, you have that ability. But with our short-term leases that are typically, month to month, we're able to, adjust those. And typically we don't raise more than once per year the rents, but just having that ability to do so is very powerful. Let's see here. Zoning approval makes it hard to build new mobile home parks. I think this is the big one right here, talking about the supply constraint. Number 3, cost to build new mobile home parks rises with the inflation. Cost to build really anything rises. Long-term fixed rate debt options, sponsored by the government, really help as well. And then there's lots of value to be added, which that's my favorite part. Happy to chat about that here in a moment. So number 1, obviously rental rates, being able to increase those while operating expenses, stay relatively stable, right? Once you have a stabilized mobile home park, you really have your biggest expense is going to be your property taxes. And, you can monitor that pretty closely, and along with insurance and management costs. But your mortgage amount is going to stay the same, when your rental rates go up. So, with that inflation, it actually can be, beneficial, and it can be, ideal for commercial real estate owners. Also, mobile home parks were around $50 per month, the rents back in 1960 when most were built. In today's dollars, that's around $500 per month. However, the average U.S. mobile home park lot rent currently stands at around half of that amount, at $280 to $300 a month. So the mom and pop owners of mobile home parks have failed to raise rents in line with inflation for decades. And it's just easier, right? If you don't raise rents, there's less turnover. And, the mom and pops, that we're currently buying these properties from, a lot of times, they just don't want to make any waves, right? They're really, in retirement, and they just don't want to shock their tenant base, is what they think, by a $20 per year increase, which we've found to not be that much. Number 2, zoning approval makes it hard to build new mobile home parks. This is huge. Property scarcity. It's tough to get a new mobile home park development through zoning approval. So, the mobile home parks that are existing, will appreciate based on that limited supply in the area. That shrinking supply is a big, reason why I love mobile home parks. The total number of mobile home parks in the country is actually getting smaller every year because many are being redeveloped into other land uses. And it's a huge problem. If you just Google it, like, mobile home park, redevelopment, you'll see just hundreds of articles that pop up about people getting pushed out, in the urban core mobile home parks, and, putting up a high-rise building just because it's a higher and better use for the land. And, it's a problem. But from an investment standpoint, I mean, go back to Econ 101, right? Supply and demand. The demand for affordable housing is off the charts. The supply is shrinking of the mobile home parks that are, out there. Most mobile home parks, in my experience that I've come across, are actually like legal non-conforming, meaning that, they're actually grandfathered in for the current use, for zoning wise, but the local zoning officials, they don't want it to be a mobile home park. They want it to be bought by a developer to be, redeveloped into something else. So this is a big perk to mobile home park investing. Number 3, cost to build new rises, right, with inflation, as with everything else. So, it only makes sense in really high lot rent markets, and that's where you're seeing mobile home park developments happen. And, Texas, in that triangle, we're seeing, several new developments happen, but, the lot rents are $500 to $600 per month in those markets. And that makes sense from an investment standpoint to build new. But other markets across the country, it just doesn't make sense. The numbers don't pencil out to build new. So those existing ones, really have a leg up. I should also say on that last point, the cost to buy manufactured homes rose last year as well. Or actually in 2021, it rose almost 20%, the cost to buy manufactured homes. But when you look at it, a $30,000 mobile home, you add 20% onto that, it's right around $36,000. So it's still very, very affordable, for the end buyer compared to, $150,000 to $200,000 stick-built house. So still a very affordable option for the end user. Number 4, inflation-resistant reason is the fixed rate debt options. This is huge. So your debt essentially becomes cheaper and your rental rates can keep rising. Real estate is shown as the best inflation hedge in most econ textbooks. Land and improvements are hard assets, just like gold, and their value is inherent regardless of currency fluctuations. So the debt is really important. If you own a mobile home park that is valued at $1 million and inflation goes up 3%, then the value of that property should rise to $1,030,000. However, a dollar, will fall to 97 cents of purchasing power. And since debt does not go up with inflation, its amount is being capped at what the mortgage says. So as inflation rises, it erodes the debt. So the property worth $1 million with an $800,000 mortgage will now be worth $1,030,000 with an $800,000 mortgage. So you have a gain of $30,000 to your asset value. So I think that's really key to why a lot of us look at commercial real estate as an option. Also, there's agency lenders, Fannie Mae and Freddie Mac, that offer the best terms to purchase mobile home parks. And what's cool about these two, government lenders is that they're not just going to loan on a crappy, trailer park, right? Like, you have to meet certain criteria and you have to invest CapEx dollars into your mobile home parks to meet a minimum threshold that they require. They want to see curbs and gutters and paved roads and paved off-street parking. And, they're making mobile home park investors reinvest into these assets and making them better and giving them more longevity, because the government sees that this is an option for affordable housing and, in the long run. So yeah, I think it's important to note that, like, hey, the U.S. government is on your side when you invest into quality affordable housing. And, the mobile home park owners are highly incentivized to get their mobile home parks up to par and not have deferred maintenance in order to qualify for this type of financing, which is, the best out there. Slumlords it's a lose situation for them. So because they're not going to be able to get this debt, they're going to have to go to other options that create less cash flow off of the properties for them. But what we like to do is create a win-win, for ourselves and our investors, and then the tenants, right? Because they get a nicer, better community to live in, that's better maintained. My favorite one right here, inflation resistant, number 5. There's lots of value add in mobile home parks, and the NOI growth opportunities are abundant. Like I said earlier, the majority of mobile home parks, around 70% of them, are still owned by mom and pops, retiring baby boomers. And most mobile home parks are not institutionally owned and professionally managed. They're managed by these mom and pops. And when these mom and pops are ready to retire, they're leaving a lot of meat on the bone when they sell. And this helps offset, inflation losses. So some ideas of this, that we've come across recently is, they don't have good financials. They're not keeping good books on the mobile home parks. So when they go to sell, no buyer is able to get decent financing because of the poor financials that they've had, or they've kind of been, cheating Uncle Sam and maybe accepting cash and not fully reporting everything. And ultimately that just hurts them, right? Because that property is not going to be able to get the debt that it otherwise would have by the next buyer, with proper reporting of the income and so forth. But ultimately, what I've seen a lot of also is the mom and pops, they typically did all the work themselves. They would rehab the mobile homes, they would paint, they would do everything themselves. And now once they get into their 70s, they don't want to do that anymore. So when a home goes vacant and it needs $4,000 worth of work to get reoccupied, they'll just leave it vacant. And we've bought several of those types of properties where the mom and pops have 7 vacant homes that need $4,000 or less, and they're all vacant. So we can't pay them for those units that are vacant. But if they would have invested that money and got those occupied, we could have paid them, another $30,000 to $40,000 each, in terms of the purchase price when we bought their properties. So lots of opportunities. The mom and pops, leave meat on the bone. When a home leaves, and there's a vacant lot there, there's so many mobile home parks. I mean, I'm sure a lot of you have seen them. You drive through and there's vacant lots, just vacancy that just, don't get filled again, because it is somewhat of a laborious process to infill a vacant lot and bring a home in and get it set up and get the utilities hooked up. And there's multiple people involved, but it is a huge value add option. Sub-metering is another one. Mom and pops have just covered the water sewer bill for their tenants for years and years and years. So when we come in, what we find is we'll put on these Metron meters on all of the homes, these sub-meters, and then we start billing people for their usage. And it's funny because the total water bill goes down by like 30%. The total consumption goes down by 30% now that somebody's actually monitoring it and tracking this. So there's conservation, and it's just better policy, because now we're able to cut 10% off of our expense ratio by doing that sub-metering. And there's some other ways on here that you can add value. Cable contracts, carport rentals. We've done that. Cell towers and billboards as well with the land. Okay, mobile home park return on investment. These are just kind of some baseline estimates. Again, just full disclosures, this is no guarantee of getting these returns. Obviously, the next 5 years are going to be, a lot different. We're getting quoted, 7% interest rates on our new acquisitions, where, a couple years ago we were getting 3.5%. So obviously things can change, but based on the last 5 to 10 years and the deals that we've done and our investors, if you're buying a stabilized property, the returns were right around that 5 to 8%. That's no infill. That's just kind of, annual rent increases. Value add returns. This is where we play currently, and in the past have played, where there's infill, there's rehabbing homes, there's, deferred maintenance we're fixing. This has been really realistic, and we believe that this is still possible moving forward. And in ground up developments, this could be 16 to 20%, previously. But again, a lot of risk here considering the costs, the supply costs that have gone up. So again, these are rough estimates, but just wanted to share that with you all. Okay, so what does mobile home park value add look like? When I do my one-on-ones with investors, every single week, I'm talking with new investors that have come from investing passively in maybe apartments or self-storage or a lot of other asset classes, and they say, hey, what does value add look like in a mobile home park? If you're paying this cap rate today, how are you going to add value to this to create that 10+% annual return? And there's a few ways. One way is to raise rents. But that's not our only bread and butter. And there are some operators out there that have raised rents too fast. We prefer to do our improvements first and then implement rent increases so that the tenants are on board and they see what value we've added. But raising rents, they're low across the country, so this is a big one. Otherwise, it makes sense to be redeveloped, right? If they're not maximizing the income the property could generate, it'll make sense that the property needs to have a higher and better use and do something else and not be a mobile home park anymore. Submetering water, sewer, we talked about that. That is going to conserve water and be huge for your NOI. Add storage sheds, other stuff as well. Build the tenants for trash, that's another one. Infill is a big one. We have that mobile home transport company, so that helps us with this. But yeah, fill vacant lots. There's way too many parks out there that just have vacant lots because mom and pops were just tired and they didn't want to have to go through that. And they, a lot of the mom and pops we're talking to nowadays, they own their parks free and clear, and they're still making, 6 figures every year. So why do they need to go through all the hassle of infilling and filling 10 lots in a 80 lot park when they're still making 6 figures and doing really well in their retirement off of the investment they've made? Okay, so here's just a real quick kind of explanation of the value of $1 in mobile home parks. And my mentor, his name is Ryan Smith, he taught me this, the value of the dollar, and go hunt for dollars when you're in your properties. But a 6 cap mobile home park, at a purchase price of just over 4.1 million, would have a net income annually of 250,000. So when you're going through a mobile home park and you're looking for ways to increase the income, for every $1 of income that $1 of income a month that you can generate, that will add $200 to the value of the asset when you go to sell, if it's a 6 cap. So I think that's just a really cool visual of, hey, can you rent out sheds? Can you, add a carport? Can you, submeter water, sewer? How can you get creative to add value to these properties? One thing we started doing is bringing in storage. There's these like portable storage units that you can put, right in front, and then start renting out those storage units to the tenants. Because it cleans up the property so that you don't have lawnmowers and everything just all over people's front yards. And you're also able to generate more income, right? So it's just a win-win on that side of things. Okay, here's a cool case study. So this is a mobile home park in Indiana. We infilled 26 homes, 26 vacant lots when we bought it. We infilled and we were able to generate $350 a month lot rent off of each of those, which got us up over $9K a month. So take that times 12. This is the additional gross profit we created. You take away 35% for expenses, you generate just under $71,000 in income. So you take that at a 6 cap and you added, just under $1.2 million in value to the property. And it only cost us $400,000 to bring in those 26 homes. So I think that's a cool visual of, the opportunities in mobile home parks. The other thing is when we brought those homes in, we didn't just give them away for $350 a month. We were able to sell them typically on like a rent to own contract to the tenant and give them a great deal because, all we're really trying to do is just get our money back that we put into it. So if it costs us $15,000 to bring a home in, get it set up, get it hooked up to utilities, we'll just sell it for $15,000 and maybe we'll get, $3,000 to $4,000 as a down payment. And then they'll just make monthly payments, 0% interest right back to us to recoup the home price in addition to lot rent. So we're getting that lot rent plus our money back for the home we put in to sell those or to bring those homes in. And it's just a huge win-win because we're adding affordable housing to the market, and it's a really good cash flow for our investors. But infill is the hardest value add component because, again, there's a lot of moving parts. There's buying the home, making sure it has a title, if it's a used home. There's transporting it, getting a transporter that has license, insurance, and the full bit. And then the installation process has to be by a licensed installer and meet HUD guidelines for footers and so forth. And then the utilities all need to be hooked up. It needs to be, skirted, and there's just it's a longer process than you would think. And permitting and so forth can have flaws there, but it's very rewarding, obviously. We have some more case studies on my website if you'd like to check those out as well. That's keelteam.com. But like I said earlier, I'm pretty value add. I'm a hands-on guy. This is myself and my partner John underneath some homes up in Illinois, installing them and being hands-on. So it was fun this time of year to be up there. But if you actually go up right now in February, it's quite chilly up there. Here's some additional details on that infill project in Indiana that I told you about. Equity investment, $600,000, distributions more than double that. And in 20 months, we were able to refinance that into a Fannie Mae loan and, pull out significant equity. And now our investors will be in this deal with us into perpetuity, getting monthly cash flow off of the rental income. So an absolute home run deal. So here's another case study. Now this one, instead of, doing the infill and kind of diving into that, this case study is going to show you, just by billing back for the water sewer, the value that we can create, right? So, you can look at this P&L, you can see, hey, this is the income the property generated in 2020. This is income in 2021, without even doing a rent increase. And just collecting the same amount of money that the seller is collecting and keeping all the other expenses the same, actually increasing the management expenses by $8,500 a month, and just taking off this expense for the water sewer and billing that back. We added $768,000 to the value of the property. So that's just what's possible because these mom and pops, if it's a master meter system, from when it was built, they just kept it the same and they didn't ever, sub meter or even know that was a possibility. So now, when we're able to pass through that at cost to the tenants, it just adds tremendous value and, can be really rewarding. And to sub-meter, I should note, it only costs us around $400 per home to put these sub-meters on the home. So we just, from the water main, we have, a stub up that we will, heat tape and insulate, which is what's going on here, and, hook it into the home. And then it's actually read by like a radio read. So it connects to a website that'll show us if there's high usage or low usage. So we can identify leaks and things like that throughout the property, which are common in the mobile home parks up north where it gets really cold. Case study number 3, we rehabbed 22 vacant homes. This was a huge win. Again, just not even counting selling those homes in the sale income that we received off of them, just counting the lot rent, we were able to generate $60,000 in income, which at a 6 cap when we refinanced the property, added over $1 million of value. So it's absolutely, amazing what these mom and pops are leaving, from a meat on the bone standpoint. And when we rehab those homes, it only took us around $5,000 to $6,000 per home to rehab them. So it was around $132,000 in CapEx funds, invested, and then, the project management time to rehab all those homes to generate $1 million in value. So pretty cool what's possible. Here's some photos of that in process. Yeah, we did some other improvements as well, but you can see, put in 375 distributions, over 1.3 in a matter of 23 months. And this is another one that we were able to get qualified for Fannie Mae financing, just 23 months after we purchased it. So came in, did the rehabs to the homes and some other, general improvements around the property, and, added a ton of value. And our investors in this deal, again, we rehabbed out the initial capital. They stay in the deal with us after the fact, and now we'll get cash flow distributions into perpetuity with us. So pretty cool opportunity. Okay, here is a section now on ways to find mobile home park deal sponsors to invest with. This is pretty interesting because, like I said earlier, it's fairly tough to find mobile home park deal sponsors because they're not that popular. There's a lot of smaller ones that are doing 1 or 2 deals here and there, but from a larger model of buying several and implementing a value add strategy, it can be tough to find. But here's some ideas of where you can find operators to invest with. Facebook and LinkedIn groups. There's specific groups for mobile home park investing, and there's operators in there contributing and getting questions answered and things like that. Another way is podcast guests. I mean, podcasts are a great avenue to identify new operators. Let's see here. MHU Forum is another way. Let me see here. So here is a Facebook group, Mobile Home Parks in Real Life. Has like 5,000 or 6,000 members. It's just facebook.com/groups/MHP Mastermind. Tons of operators in here asking questions, and you can tell who the bigger operators are that are doing deals and have experience. And that's what I would put at the forefront, is finding operators with experience. This is a good LinkedIn group. It's called Mobile Home Park Investors. And again, there's like over 6,700 members and a ton of actual operators that are in there asking questions, asking for lenders and things like that. So this could be another good way to find other operators to invest with if I was looking to invest. This is my podcast, the Passive Mobile Home Park Investing Podcast. There's actually 100 episodes now on the podcast, and I've interviewed, I would say, over 70 operators and different people in the mobile home park space. So this is another way that you could find other operators to invest with and kind of learn about their experience and background and find some that are a good fit. This is the MHU Forum. So Mobile Home University is a big educational seminar type of thing, boot camp, where you can learn how to invest in mobile home parks. And there's a forum where people are, again, asking questions and working on active deals. So this is another way you could find operators to invest with. Okay, how to vet a mobile home park deal sponsor. This is if I was investing passively, which I've done a few times, into other operators' deals. The most important thing is going to be reviewing their track record. Can they share case studies showing an execution of the value add components that they plan to perform on their most recent project that you're considering an investment in? I think that above all else, is going to be most important, because you want to go with experience. You don't want to, lose money investing with someone's, investing with someone that's using your money as education, right? I think that's the biggest piece is investing with those that, have done this before. That's going to help. Speak with investor references. I mean, this goes for other asset classes too, guys. Talk with a couple of investors. How are they communicating? Is the operator communicating? I know, a couple of passive investors that I've spoken with have just stated how, the operator, kind of goes dark from time to time. It doesn't have a consistent communication schedule, whether that's monthly or quarterly or whatnot. And then also ask them, how the performance has been of their previous investments with that operator. I would always ask the operator about, mistakes they've made. And, one investor I spoke with, he said, hey, if they haven't made any mistakes, they're not telling the truth. And, they don't have the experience if they haven't made enough mistakes. Like, you want investors that have made mistakes and learned from them. And that's how they're going to, continually get better. Another great way to vet an operator is drive through one of their mobile home parks. Will they share a park that's around you? Can you drive through it? Or can you hire someone on Craigslist or something for $50 to $100 to just do a drive-through video and have a camera out their window and just kind of drive through and that could be very valuable. Like, are there appliances in everybody's yard? Is the landscaping maintained? How does the management of that community look? That would be a great way to vet a mobile home park operator, because if they're on it, things will look clean and decent. If they're not, things can go fast. Things can go downhill fast. Another thing you could do is request a recent quarterly report, that the operators sent their investors, and what does that look like? I would obviously request financials if possible, and does it look like the project's going in the right direction based on the quarterly update, and how's the format of that update? Is it professional? What's the expense ratio? Is that around 35%, which is typically average? So those are good things to look at. Someone told me once, and it resonated with me. They said, hey, how they do anything is how they do everything. Are they responsive? Are they on social media? Are their emails professional? A lot more goes into investing with someone passively than just seeing the pro forma, right? Because out of all the pro formas that we've done, not one has gone exactly according to plan. Some have gotten better, some have gone worse, but it's all about, about how accurate they can be based on their experience, and are they controlling what they can control? I think that's the key piece. So I think that's pretty important. Okay, here's how to quickly analyze a mobile home park investment, like a quick 10-minute deal review. A FEMA flood map is going to be a key one. You don't want to buy something in a flood zone. I couldn't sleep at night having something like that. That could happen. And obviously lenders, review that, and they won't lend. The top lenders won't lend on a mobile home park if it's in one of the flood zones, like the 100-year flood zone or higher. So that's a big one. Bestplaces.org is a good website to check out. Has a ton of information about the local demographics. What we look for is an MSA population above 50,000 and a median home price above 100,000. We also look at the median home or the median income, and we want that to be above 40,000. And from our experience, those have led us to better markets to invest in. So those are good to check out. Rentometer.com. Check out what the average 3-bedroom apartment rent is, and if that's over $1,000 a month, which is pretty common for most of the country. Obviously there's a big spread between apartment rents and what the lot rent would be in a mobile home park. So this is a big one that you're going to want to look at, because this will show you if it's a decent market that has a need for housing. Spot crime will tell you, crime data. You can just insert the address. Greatschools.org it's no lie. It's no hidden thing that, good schools attract good people. And if you have good schools, you'll be able to, fill up your park pretty quickly. Diverse employment is key. We always look at the top employers and make sure that there's good employment, and that it's not just a one-horse town. I think that's a really important one. Pitched roofs are a big one. That'll show you that there's newer homes that usually last longer, and those will be easier to rent because the flat roofs or the rounded roofs are a sign of those homes being older, and they're typically smaller and have more maintenance issues. So pitched roof mobile home parks are typically what, at least maybe a good split, at least, where there's a mix of pitched and flat roofs instead of just all flat roofs. The age of the homes is going to be a big one. And then majority tenant owned homes is what we go after. We just find when people own their homes, when people own their homes, they typically stay longer. And when they're just renting, you have like a flat apartment complex with a bunch of park owned homes, you're going to have, more turnover. So I think that's something that you want to look at up front is, hey, how many park owned homes are there? How many tenant owned homes are there? And lenders, that's one of the lender requirements. They want 25% or less park owned homes, the agency lenders. And that's basically how our whole model is set up. We're gonna buy a property with regional bank, and then we're gonna fix the property up so that it gets approved for agency financing with Fannie or Freddie. And that's just something that we're working towards, because we know that if it gets Fannie debt, that long term, that's going to be a good property that we're going to be able to make a good return on. Last item here is the utilities, which probably should have been number one. The utility setup is really important. If you have a well system for water, or you have septic tanks, you're going to have a higher expense ratio. You're going to have a higher liability, especially with the drinking water, right? Like with well water, there's EPA and health department testing mandates, and it's going to be more management intensive. So you're definitely going to want to make sure that you understand and that this operator has experience with the utility infrastructure that they're taking on. Type of project, is it an infill or stabilized project? Based on what your investment is and kind of what your expectation is return wise, does that meet what you're looking for? And then how long will your funds be tied up? Those are things that I would look at when making a mobile home park investment. And with that, thank you all so much, for attending. I would love to answer any questions you guys have, but thank you for listening. And if you have questions, please fire away. We'll kind of jump into that section next. If you're going to drop off, and you did enjoy the presentation, please leave a review. You can email that over to Colin, and I'll appreciate it, because that's why I'm doing this. So thank you all so much.
Yeah, absolutely. Thank you, Andrew. I don't know if you have a slide with your contact information or anything on that, or if you want to share it. I couldn't remember if you.
Yeah, I think, if the contact info, if they just visit keelteam.com, there's like a contact form on there. That would be the best way to get in touch with me.
Perfect. Okay, awesome. Thank you, Juan. He already put it up there on the screen. Great. Well, thank you again. And now at this point, we've got some time to go into some questions. We had a lot actually come in throughout the presentation. So,
okay, awesome.
We'll kind of, we can just jump into them. This first one here from Elizabeth. Do you have any specific do's and don'ts of mobile home park investing that you kind of want to jump into?
Do's and don'ts. Yeah. So, I would say the biggest thing is that utility infrastructure. If we go back to that, like personally, we don't invest in properties with lagoon sewer systems, which I won't discuss to you with like how that all works. But basically, the EPA is like phasing out lagoon systems. So You'll see those like, listed sometimes. And if you're a newbie investor, I would definitely, only buy a mobile home park that's like city water and city sewer, because those are going to be way safer than buying something with a private, sewer system. Because there's a horror story I heard once of someone getting fined $10,000 per day by the EPA because they had a septic system that was leaking, and it can get really bad really fast. So do's and don'ts, I would say public utilities, city water, city sewer, would be my initial most important thing to look at, and then stay away from a lagoon sewer system.
Great. Okay. We had a few questions about this as far as taking the depreciation when you only own the land and not the mobile homes themselves. Do you have any advice on that?
Yeah, that's a great point. So basically, when we buy a property, say it's $1 million, the land only accounts for like 20% of that, 25% of that. So the rest of it, can be depreciated because it's all improvements, right? Like your roads, your fencing, your utility infrastructure is really expensive. Your electrical pedestals, your water and sewer lines, and all of that work, all of that can be, what we do is we get a cost segregation study done, and all of that will be depreciated over different timelines. But yeah, we're typically able to depreciate around 80% of the purchase price. The rest would be the land.
Okay, awesome. This one was a little bit interesting. It seemed a little off topic, but I thought I'd bring it up. With senior population selling their traditional housing because they want to downsize or have to in order to access the equity in their homes, do you see a coming glut of traditional houses? Or maybe on the flip side, do you see some of the more elderly generation or baby boomers that as they get older, maybe moving out of their houses and into mobile park homes and spiking kind of an increase in mobile home park housing?
That's a really good, good insight there. I've been, surprised by the baby boomers and kind of, what they're doing and downsizing and so forth. I think in certain markets, like in the Sun Belt, you will see, and we've seen it already, where there's an increase in, the 55 and older parks, the retirement parks that are amenity rich. They have a 9-hole, par 3 course, and they're the clubhouse with the cruise director and all of that. So I do think that is a really cool style in Arizona, Texas, Florida for retirees, and it's an inexpensive way to retire. But I'm not sure if there's going to be a glut, because I think we underbuilt because of what happened in 2008, and I think that there's a big shortage in housing. So I think that there's, we're still behind the 8 ball. I think, millions of housing units. So I think that's, there's not gonna be like a glut anytime soon.
Sure. Okay. I know you had maybe mentioned the specific bank that you guys use, but do you have, maybe any references for lenders who do finance mobile home parks?
Yeah, there's tons. I mean, typically we'll call like all the local banks around a property and, your credit unions and so forth, and there'll be some decent options there. And then, like I said, Fannie Mae and Freddie Mac, you can even go to, there's Vanderbilt Mortgage, which is owned by Berkshire Hathaway and Warren Buffett. There's First Bank or there's several out there that will loan on mobile home parks. So, I hope those are good options for you.
Yeah, perfect. Let's see. Some more about depreciation. Okay, this is kind of going back into your presentation. What did you mean when you were talking about stabilized?
Yeah, so stabilized is typically a property that's 95% occupied or higher, and there's not a ton of like value add to it. Like there's not bringing in homes. It's already sub-metered. It already is full. the only, additional value you can add is just be like annual rent increases, but it's not, it would be considered a property that is, stabilized. It's full. It's already getting the water and sewer sub-metered and billed back to the tenants. So someone else has already done the hard work of getting it to, this point of stabilized. So some investors prefer to invest in that because there's less, operational risk, right? Because it's already operating efficiently.
Sure. Okay. In regards to, I guess it was the first investor case study that we were looking at. Number one question from Vicky: how much were the 26 homes, and what interest rate do you charge to tenants?
Yeah, so that's what's pretty cool. We don't actually charge an interest rate. We just look at what our cost is and then bill them back. But yeah, typically we're able to infill used homes for anywhere from $15,000 to $20,000 each. It just depends what the specifics are of the deal. Mm-hmm. But new homes, if you're going to buy them, brand new from the factory, obviously those are going to be a little bit more expensive. Typically, around 35. They've gone up, quite a bit. So I would say, anywhere from 35 to 55, depending on the manufacturer and the quality and the size you're looking for.
Great. Okay, Jeff is wondering, I'll go ahead and pull this back up, if you can show the return on investment slide again. I don't know if you can click back through there.
Yeah, let me see if I can find that. Faster. Here we go. Looking at this one. Is this the one or the one from Hudson? Is that good, Colin?
Yeah, I think that's perfect.
Okay, cool.
We'll just leave that up for a second. We'll be able to go through a few more. Okay.
Sure.
Yeah, there's still a ton of questions. Considering the interest rates and inflation today, isn't 6 cap extraordinarily low?
Yes. Yeah, I would agree. Yeah, I mean, I think that's low for like a value add at acquisition type of property. However, if you're looking at like a Class A, there's stuff trading below a 6 cap right now. So that was just kind of like a look at what's been done in the past. But yeah, with interest rates where they're at, there's still some big, hedge funds and things like that have cheap debt, cheaper than I can qualify for. And yeah, they're still buying stuff, very, very low cap rates. But yeah, I mean, it's low for where we're at right now.
Mm-hmm. Okay. This question from Brian: when you invest in mobile home parks, do you own the land and building or just the land? Kind of what is your method of going about that?
Yeah, good question. Yeah, we don't like to own the homes. We just want to own the land and rent out the lots. However, when we buy a property and we infill homes on it, it's very rare that people are going to like buy their own home and bring it into your park and fill your lot and like pay all those expenses. So typically you go buy the home, you bring it in, you set it up on your lot, and then you sell it, once it's there and it's ready and it's move-in ready to that tenant. And you can sell it for cash and there's financing out there, or you can do like a rent to own type of agreement as well.
Awesome. Okay, let's see where we at. Can you give us an idea of the typical minimum investment amounts for passive investors doing, these type of these deals?
Yeah. Typically it's $50,000.
Certainly it will depend, I'm sure. Yeah.
Yeah, and different operators have different minimums and things like that, but typically from what I've seen and what we have is $50,000.
Okay. Let's see. This is something I'm not familiar with. Can a quasi-private water system be metered?
Quasi-private. That's interesting. Yeah, quasi-private. I'm not exactly sure what that means, but let's say let's say it's a well system, and it depends on the state. Some states allow it, like Ohio. We have a park that's on well, and it is sub-metered, and we bill back for the water there, but some states may not allow it. But I would say most states that we've come across will allow it, but they'll have like a minimum, that you're able to charge. Like you can only charge, similar to what the local municipality is charging for their, water.
Okay. Another question from Elizabeth. It'll pull up. There we go. Do you have any specific sites or maybe people you go to buy new mobile home parks?
New mobile home parks. I think this is new mobile homes.
The units themselves.
Yeah, so we've bought in several from Clayton Homes, which is obviously owned by Berkshire Hathaway and Warren Buffett, and then also Legacy Housing Corp has a cool program where they'll actually like finance the homes for you in house. So those are a couple that I'd recommend.
Okay. Here's an interesting one from Terry, something I wouldn't have thought of. Do you have any age restrictions, I guess, is for your tenants in these mobile home parks?
We have one park that is a 55 and older park, and it's in kind of like a retirement area. And it's a really great park to manage. It's really, really quiet. But yeah, there's definitely different models inside of, the asset class of mobile home parks. There's the age restricted, there's the all age, more affordable housing type of communities. And then there's recreational mobile home parks like /RV parks, which are like used as vacation homes, around a lake or something like that. We see that, from time to time up in the Midwest.
Okay. Here, Terry gave a little bit more insight on her quasi-private water system. It's not a well. The park is located on the town's water source, and the owner owns the water lines.
Okay. Yeah. That's the ideal situation, is if it's on the town's water source, so that they're responsible for monitoring it, testing it, getting the chlorine tested and things like that. So that's not your responsibility. But then it's very typical that the park owner will own the water lines. And, if there's a main leak or something like that, that you're responsible. After typically it'll connect at the road, and that'll be the city's line, and then where it goes into the park, the owner will be responsible for the maintenance of those lines. So yeah, no, that's very typical. We have a lot of parks like that.
Okay. And Yev wants to know if you own any mobile home parks in California.
None in California. Have stayed away from that state entirely just due to the landlord-tenant laws. But I do know some investors that are out there, and that's their bread and butter. That's what they know. But yeah, just with the rent control and things like that, California is not the most friendly state for landlords.
Fair enough. Terry also asked, are you having difficulties buying new mobile homes without an extensive waiting period to be manufactured?
Yes, it's getting better, but during COVID, the backlogs were insane. We had to wait over a year to get some homes.
Wow.
So yeah, it's been a little crazy, but typically it's only around 3 to 4 months. I don't think it's that quick right now, but at one point it got over a year to get homes received because of the backlog and supplies and everything that was just causing that delay.
Where would you say it's at right now? 5 to 6 months, somewhere around there?
I haven't ordered any homes, but I think it's around 6 months.
Okay. Raul wants to know, what is the smallest park you have as far as number of homes?
Great question. Yeah, that's a great question, Raul. The smallest park I have is 31 lots, and our new minimum is 50 lots. I wouldn't buy anything under 50 lots now, just because it's the same amount of work from a due diligence standpoint, a management standpoint. It's actually a little bit harder to manage a 31 lot park because you can't pay your on-site manager as much as you can pay the on-site manager of a 109 lot park. Like our easiest park we own is 109 lots, and we're able to pay the manager, a decent wage to be, available to kind of take care of things as needed. With the 31 lot park, it's like a very part-time role for the manager, and it's a little bit more tougher to manage. But yeah, good question.
Yeah, that's awesome. Okay. Question from Wendy. How long do you usually hold the mobile home parks? I'm sure that kind of depends on utilities and different things like that you were talking about, right?
Yeah. So I'm going to buy and hold all of my parks forever. I've only sold one park, and that was because we didn't believe in the market anymore. In the market, some things changed. An employer left, and we decided it was just better for us to exit. And we got from Sam Zell, we got a Godfather offer. I'm not sure if you read his book, Am I Being Too Subtle? But we got a really high offer. We sold it, in 2021, and it was more than we would have paid for it. So, but on all of our other deals, our whole plan is to buy something that needs work, add value to it, and then refinance it, pull out the initial equity, return it to investors, and keep the investors in the deal, but then hold it into perpetuity and refinance every 10 years, with the agency lenders, and just, have that cash flow churning every month.
Okay. Another good question here. Do you, or maybe do you know anybody that kind of acts as a mobile home park, like investment sponsor, or have, you kind of your own funds for people to invest into?
Yeah, good question. So we don't have a fund. We currently just do individual syndications where we'll raise money per, property that we're buying. And we probably do, I would say probably 6 a year, like that, 6 to 10 a year. But there are other mobile home park funds out there that you can, look up, and, they will buy like a whole portfolio of parks, and things like that.
And do you offer those syndications up to like public investors, just to anyone, or is it?
We do. Yeah, we do.
How would, if they wanted to get in touch with you about that, just at your website?
Yeah, that's the best way. Yep. keelteam.com.
Perfect. Okay, moving on. How to find what permits are needed. Yeah, as far as permitting goes, how to know what's needed.
Yeah, the local municipality is going to be the best to contact. Usually they have a utility department manager. You need to sit down and talk with them if you're going to try to change it from well water to city. Typically, I don't think I've heard of anybody that wants to go from city and go back to well. Because once you have city water, you want to stay there, because it makes the property worth more, and that's your better bet. But yeah, that's what you would need to do, is just talk to the utility manager and kind of discuss with them, if it's possible. If the main, goes right out front of your property, it's obviously going to be a lot easier than if you have to, if the city has to run the main, a couple miles to get to the front of your property so that you can hook in.
Okay. Interesting that you were just talking about syndicating these. So once you refinance, do you give investors the choice to cash out or stay in and invest for cash flow?
Once you refinance, do you give investors a choice to cash out or stay invested for cash flow? So most of our investors are long-term, and they want to stay in for the cash flow, and they know that up front, that like, hey, that's our goal. But there is the option in our org docs where like you can, request to be bought out by, any of the other members, and you could, cash out if you'd like at that point.
Okay. Let's see what else here. Just a few more. Which are the most friendly states as far as
That's a good question. Yeah, that's a really good question. Without getting too deep into the politics talk, I would say the red states, the more Republican states. Your Indiana has been a really good state, for us on that side of things. But yeah, I would say the red states would be a good place to start.
Okay. Wendy also asked, how much does it cost to add a new pad to the park?
To add a new pad, the concrete pad, or like add a whole lot with the utility stub ups and everything, I would say it's going to cost around $7,500 to get get everything where you need it to be to get a home put on there. But that's going to be, that's going to depend on how close the water, main is, the sewer main is, and so many different factors. But yeah, I would say 7,500, really up to 15 grand, based on what your concrete requirements are as well.
And then from that standpoint, once you have the pad ready and everything like that, how much does it typically cost to bring in a mobile home to fill that vacant lot?
Yeah, once you have the pad and you have the utility infrastructure right there ready for it, you know, to transport a mobile home, it's fairly expensive. You know, it'd be like $3,500 to $5,000 depending on like the distance of where it is.
Sure.
And then it's typically like $3,500 to $4,000 to install the home, like get block leveled, tie down, you know, skirted, and then you'll have to hook up water, hook up your sewer, you know, hook up your electrical. And then you got to buy the home, right? So like the home, you know, new homes can be 35,000 plus. Used homes, you know, to buy like just from a, you know, somewhere around where you live can be around 15,000 typically, but it varies by market.
Okay. And Terry must have been reading my mind, kind of going off that same question. Do you prefer filling these empty lots with rehabbed homes or new mobile homes?
Great question, Terry. Yeah, so I prefer to do 50-50. Like we have a park we're looking at right now up in Minnesota, has 36 vacant lots, and we can diversify because the new homes are going to be more reliable. You know what you're getting, and you can count on, okay, it's going to take 6 months to get these in. Okay, you know, we'll count on, you know, doing half of them new homes and then half of them used homes, because the new homes, you know, when you buy them, they're going to be more expensive, and there's going to be a note typically on those. Or the used homes, if you can buy them and get them all moved in, say for, you know, $18,000, you know, hooked up and everything, you're going to be able to add the most value from the used homes. You know, if an occupied lot, the value of an occupied lot is, you know, $50,000 and it costs you $18,000 to bring in a used home, and then you sell the used home for, you know, say $15,000. You can even take a loss on selling the home of $3,000 versus the $18,000 it cost you to bring it in, but you added $50,000 worth of value to the property. So, yeah, 50-50 is my preference.
Okay, awesome. There was one other question about how to find out more information about your syndications. The website, who was that? Tracy, is right there on the screen, and I'll put up the comment as well. But that's all the questions we have. Andrew, really appreciate your time today. And again, everybody, sorry for kind of the late start. I know we went a little bit over too, just to kind of make up for the time. And there were a lot of really good questions. So yeah, Andrew, again, thank you so much for taking some time out of your weekend to speak a little bit to, you know, on our platform and things like that.
Yeah, thank you. Thank you so much, Colin. I really appreciate you all having me on, and thank you all for attending.
Yep, absolutely, guys. Any more questions you have, feel free, you know, go on Andrew's website, reach out to us. We can get you guys in touch. But thank you, everybody, for attending today.
Thanks again.
Yep. Bye, guys.